This weekly newsflash is sponsored by American Retirement Systems, providing competitive solutions for agents and advisors. For more information, please visit AmericanRetirementSystems.com. Total assets in 401k plans topped $3 trillion at the close of last year, up 13% from 2009, according to the Society of Professional Asset Managers and Record Keepers, or SPARC. The growth was the result of a surge in the U.S. equity market and the large number of company-sponsored retirement plans, SPARC said. In 2010, more than 74 million Americans were enrolled in more than 536,000 separate 401k plans, compared with 73.4 million workers in 510,000 plans the previous year. Nearly 70% of 401k participants' account balances were invested in stocks, including the equity portion of balanced, life cycle, risk-based asset allocation, and target date funds, the report said. Between 20,000 and 22,000 new 401k plans are expected to launch in 2011, the majority of which will be started at small companies, SPARC said. Most affluent clients are happy with their financial advisors, but often look elsewhere for specialized financial advice, according to the Dow Jones Affluent Investor Study. The survey found that while 70% of affluent investors said they are extremely or very satisfied with their current advisor or wealth manager, they often seek help from other professionals when it comes to certain financial needs. 17% of respondents said they're not receiving enough information or counseling about tax strategies from their current advisor, while 14% said they looked elsewhere for help with estate planning, and 13% felt their advisor didn't provide sufficient advice on emerging markets. Additionally, nearly half of wealthy investors said they prefer to manage their own investment portfolios. One-third of the 1,287 respondents with more than $500,000 in investable assets said they have not developed a retirement plan with their financial advisor, Dow Jones said. Employees of all ages place high value on their benefits, but many don't know how much their medical insurance costs, according to a new survey from LIMRA. The report, What is $1 billion an Hour Worth? Employee Perspectives on Benefits, surveyed 1,500 employees on their participation, knowledge, understanding, and attitudes pertaining to employee benefits. Approximately 40% of respondents said they lack any knowledge of how much their medical insurance costs. Of the 60% who said they understood their costs, only 15% provided a reasonable estimate, LIMRA said. According to Anita Porter, Assistant Vice President at LIMRA's Group Product Research, quote, "One common employer misconception is that older employees value benefits more than younger employees. In fact, when it comes to benefits, younger employees value benefits nearly as much as older employees. The different values that employees place on benefits appear to be more a function of life experience rather than life stage, income, or education levels," unquote. Overall, employees indicated that they are willing to pay more to keep their current plans for benefits such as medical, dental, and vision insurance. However, approximately one-third of employees said they struggle to pay for benefits. 60% of employers surveyed said they plan to continue to shift the cost of benefits to their employees in 2011. As a result, it's increasingly important that employees understand the price components of their benefits packages and the potential effects that changes to these components could have on their lifestyle, the study said. Financial advisors and their clients rarely discuss taxes and their effects on investments, according to an SEI quick poll released Monday. Over 90% of advisors surveyed said their clients rarely or only occasionally ask about strategies to minimize taxes on their investments, SEI said. 79% of advisors surveyed said they proactively manage for taxes when considering investment strategies for their clients, while 98% are using tax management strategies. Meanwhile, approximately one-third said they can preserve more than 6% of their clients' wealth annually using tools such as tax-managed mutual funds, tax-efficient separate accounts, tax-exempt investments, and harvesting losses. For more on the industry, visit producersweb.com.